Matt, Alex Black, Rio2, with the Fenix Gold Project in Chile, fully permitted, fully financed, and construction has commenced. So that's the story here. It's been 6 months since I last had a one-on-one with you, and looking forward to telling you about our journey over the last 6 months.
Oh boy, where were we? Let's. It was never in doubt, Alex. Never in doubt. No. Look, it's been a sort of very difficult couple of years, a real kind of setback there. But we seem to be having taken a large step forward. One with the permit, and two, obviously, with the financing. So let's start with the kind of the permitting process. You finally got permits for construction. Was it? Did it take longer? Was it harder?
Oh,
yeah.
Yeah, no, it took longer. I mean, we initially came out of receiving our RCA, which is the official decree, back in April, and we thought that, we'd have our permits in place by August. And as it was early October. So, what I said to my guys, I sat down and I said, look, we have to project these things a little bit better. So let's just add, or multiply by 2 when we look at the permitting side of things. But, the permitting goes on and it's ongoing in the background. But what we achieved was our 4 key permits that we needed to allow us to commence construction. So, that was key. And we always wanted to get that out of the way before we did the financing. We didn't want to be like Skeena, who announced a big $750 million financing and then go, well, yeah, we're still permitting. They've still got another 12 months or so of permitting to go. What we wanted to do was get that out of the way, and that's what we did. And we learned a lot along the way, sort of timing wise. I mean, it's been a bit of a challenge doing this financing over the summer holidays, and North American summer holidays was a challenge as well. Getting the attention of the various financiers, banks, etc., who were participating. That was something we underestimated too. So as it was, really we lost a month. We pushed everything into October, and we thought it would be September that we'd be doing the financing and getting things done. So 1 month is not bad, and it still keeps us on track for getting this project constructed during a good or having a good run during the summer period, which has started now, and getting most of the the heavy construction done during the summer.
Yeah, I mean, it's going to be difficult to kind of talk about these things separately because I'm so intrigued with the funding. It's $63 million plus 5. Is the conversations will have look back slightly to what went before in terms of constitutional stuff, then obviously the permitting, the kind of kerfuffle around permitting, etc. With regards to, they probably want assurances around the ongoing government, provincial and state government oversight on your project. Are there any things, any small red flags which could appear on the horizon which may stop the kind of forward momentum?
Yeah, nothing that we can envisage right now. We've got to execute and deliver in an environmentally sensible way. We've made undertakings in respect to what we intend to do during the construction phase and into production for monitoring animals and various things from that perspective. As you know, there's no vegetation up there, so there's nothing that we have to worry about from that perspective. No, there's no real red flags, but we'll be on alert and making sure we do everything that we can do. The interesting thing is, and I like being transparent about everything. I mean, you have all these regulations where we are, and we've got a project at 4,000, at the highest point is about 4,900 meters above sea level. But just to be very transparent, nobody from the regulators has been to our project, right? During the last 4 years, not one person has gone to the project to look around and say, yeah, can see this, we can see that. And, Where's this valley for the chinchillas? Oh, that's over there. Okay, let's go for a walk and let's go and have a look. Nobody. Not even the regulators from Copiapó, because they don't like going to altitude. You get a headache, you feel a bit sick, all those sorts of things. So it's quite an eye opener from that perspective. And so, but from a regulation perspective, Chile is one of the most stringent countries you can imagine in regulations. Design of tailings dams, design of leach pads, design of anything, because it's a seismic zone, et cetera, et cetera. So you have all these stringent regulations, but nobody gets involved in it. It's sort of all on paper. And it's quite interesting from that perspective. And they rely on us reporting to them, right? What we observe, what we see, what we encounter, et cetera, which we'll be transparent on. But it's just a weird, it's just a weird thing. In Peru, our experience in Peru in the past, people would, people from the Ministry of Mines, people from Ministry of Environment would come to your project and walk around and have a look at things and check things and whatever. But so far, not in Chile.
Beggars belief. Like, even as bankers, we used, when we're dishing out money to people, we would send someone, usually me, to country and go walk the fields or walk the ground to actually say, well, this thing exists. So quite strange indeed, given it's their own backyard.
Well, I'm just letting you know, letting investors know. I mean, it's just quite an unusual characteristic of doing business in Chile. But I've spoken to my guys, during this whole process where we got held up with the EIA going through the permitting. I said, so how many of these guys, the regulators, the people we're dealing with in Copiapó, et cetera, have visited? No, not visited.
Well, okay, it is what it is. Let's move on to all things.
Well, it's just a characteristic. I mean, I'm just and which means, to a certain extent, and since all the kerfuffle happened, over the last couple of years, a lot of people have asked me, so is Chile open for business? And I'll say to you right now, yes, it is. It's definitely open for business. It's just the way they do business that's a little strange for me, for a mining country that relies on the mining industry from a revenue generation perspective, it's just a strange thing to witness. That's all.
Yeah, no, I hear it, and I guess slightly frustrating in the sense that if it was all desktop research based on information you've provided them that held you up, it's I imagine frustrating. But let's kind of move on to things that we are in control of. So the raise itself, obviously you had Wheaton Precious Metal in the background. Who came in on this new round?
Well, I mean, we did an overnight marketed deal. I wanted to do that because I wanted us to have a big say in the formation of the book. So I worked really closely with Raymond James and with 8 Capital, who did a fantastic job, and we all teamed up on how the book was created. But so overnight marketed. Next day, the book was 3 times oversubscribed. So we had about $140 million worth of orders in the book. 40 million of that came from existing shareholders. So I had a good conversation with those guys and said, well, why have I come back to you guys for a financing when I could have done it myself? But because our target was 40 million, as you know. But anyway, that was something we could laugh about. But it was very well accepted. 48 institutions participated, so it was pretty well spread out. We had a lot of demand. I spent with Andrew Cox, our president and CEO. We spent the last 2 months doing marketing, virtual marketing with Raymond James and 8 Capital. So we had a lot of people warmed up to the story. It was just a matter of then explaining what this Wheaton financing was all about. And the rest is history. I mean, we had a resounding success in doing the financing. We upped the book from 40 to 55 million. Wheaton came in with 5. Then when you include the over allotment, that was 63 million from the Canadian side of the financing. So we ended up with a hell of a lot more money than what we needed. What we actually needed in regards to the financing we did with Wheaton was 22 million US. And what we have today is closer to 60 million US sitting in the bank. And that's good too. We probably took more money than what we needed, but at the end of the day, being a junior company, and because of all these disasters that have happened in the sector over the last few years, we wanted to shore up our balance sheet, show that we weren't going to be another company that's going to say in 6 months' time, we're going to go back to the market to top up our treasury, et cetera, et cetera. So, we decided to take more. It ended up being about 25% dilution of existing shareholders. It was a dilutionary event, but it's our last financing. I mean, when you look at what we did with Rio Alto back, 15 years ago, we did a financing. Our last financing was in 2010, and we sold the company in 2015. There was 5 years there of nothing, and that created a lot of tension on our stock, et cetera. So it was really good. I mean, we sold the company for $1.2 billion. A great and very successful financing. And I've got to say, the syndicate there, we had Paradigm, we had Cantor, and the other one we had there was Dougie Pollitt. I don't know if you've heard of Dougie Pollitt, but he's a legend in Canada, in Toronto. And he has a small family business called Pollitt & Co. And he did a lot of lifting with a couple of the accounts. So we had a really good syndicate, participation of the company in the decision making of the book, which is important. I think a lot of juniors, they see these bought deals and go, yeah, let's do a bought deal, but you don't know where the money's going. And in our case, we were very much involved in the allocation.
Right. And obviously this off the back of a really good run. You spent most of last year between 25 and 30 cents. This year you've gone on a run up just shy of 70 cents as we talk today.
Only a 200 million US company. The MPV of the starter project is around $800 million today at today's metal prices. I think a little bit more. So, we're still coming out of the woods. But the other thing is, when you look at it, we're covered by those guys that I just mentioned. But that's the small end of the sort of banking scale in Canada. Where's RBC, CIBC, BMO, Scotia, National, TD, Desjardins, Canaccord, Cormac, SCP? None of those guys were involved because for most of them, we don't exist. Right.
Well, I guess the next bit of my next question, which I've been wanting to ask for a few minutes now, which is you got 48 groups kind of came in with $63 million raise, plus the $5 million placement. Was it the case? Was it all kind of sort of equitable in the sense that lots of people took a small piece of this because of what's gone on in the past 2-3 years? Or were there kind of some like bigger chunks and then sort of followed up by a whole bunch of kind of smaller?
There were a couple of bigger chunks.
Right. Okay.
That was part of the book allocation.
Right.
So there were a couple of bigger chunks, but it was pretty well spread out. And the interesting thing is that, as you know, all these guys go to the same accounts, right? So all the bankers go to the same accounts. So whether we did this financing with RJ and 8, or whether we did it with RBC or CIBC or whatever, we're still going to the same pool. So the good thing is that RJ's and 8 put us in front of some very, very good accounts over the last couple of months. And, we were able to get our story across. A lot of people look at our story and they go, wow, this is really simple. And that's what the market's looking for. They're not looking for complication. They're looking for simplicity. And when you've got a run-of-mine gold oxide heap leach project, you've got 5 million ounces and it's sticking out of an old extinct volcano in Chile next to good infrastructure, it's not hard to get people animated and interested in getting involved in those stories. But going back to those banks that I mentioned, the bigger banks in Canada, if you go to their comp sheets, we won't exist in the developer list because we're not there. But they'll get forced over time. They'll get accounts ringing them up saying, what about Rio2? And they'll go, well, we don't know. Well, you better know because we like it. And so, and this happened with Rio Alto back 15 years ago. We just had no following. And then all of a sudden, it was just like a waterfall. All these guys started phoning up and saying, we've got to come see your project. Let's come, let's organize site visits, blah, blah, blah. And I think that will happen over the next 12 months.
Okay, so we're kind of a creative growth at the moment, but now it's a kind of execution phase. That's what people are looking to. Say, right, they can look at your track record and history, say, right, you've done it before, you can talk to that. So execution, you say it's simple. So let's talk through that. Why is it so simple?
Well, it's run of mine, gold oxide heap leach. So what we have is an outcropping ore body. And run of mine means all we're going to do is drill and blast and dig up the rock, and it's going to, from our work that we've done from a testing perspective, we think we can get fragmentation down to 3 to 5 inches. It's brecciated volcanics, so it's already busted up from that perspective, and we just put it on trucks, take it over to the leach pad and leach it. There's no fines. There's nothing that's going to plug up the leach pad. We don't have to agglomerate. We don't have to do any of that. We don't have to crush. And we're going to achieve...
Why is that? Why is that? You'd expect there to be some fines normally, wouldn't you?
Well, because of the nature of the material. We didn't have fines at La Reina either. That was brecciated sandstone. Here we got brecciated volcanics. There's no clay in the system. There's nothing like that can plug up the leach process. So it's just the nature of the deposit. So it's simplistic from that perspective. The capital is low. I mean, we're looking at about, let's call it $135, $140 million of capital, and we'll put out a press release shortly about what the capital is projected to be, because we've done some adjustments. There's no blowouts or anything, but we've adjusted capex to suit current times. Remember, we did a feasibility study last year. So and then we'll put a timetable to that capital being spent, and when we anticipate first gold to be produced. So that'll come in the not too distant future. But so it's straightforward. It's simple. We're near infrastructure. We're near a major highway that goes from Copiapó to Argentina. The deposit's 20 kilometers from that highway. Our infrastructure, site, the camp, etc., is all on the intersection of the highway to our access road. I mean, it's great. It's got all the hallmarks of a simple and easy project. Now, what I do say to people is, we've projected, the leach kinetics, etc., to be 75%. Most of the gold drops out in 30 days, et cetera, et cetera. We're not going to not really see that until we start putting ore on a pad and start leaching it. So all that's got to come together. It could be better than that. Could be a little bit less than that. I don't know. But, we're not expecting any significant surprises from that perspective.
Talk to me about the kind of capex thing. We kind of revised it down in terms of being able to kind of deliver a kind of staged development process. So that was a case of reduced capex. Was that appealing to these institutions? Because it feels like there's lots of companies have changed their model slightly. You were kind of ahead of your time in that sense, I guess. You went early with that decision. But it feels like there's a lot of companies now talking about, well, let's maybe get into some kind of revenue flow. Let's reduce that capex. Is that what the North American market's looking for more often than not now?
Yeah, I mean, I think it is. And when you look at, I was watching a presentation the other day by somebody, and I can't remember what company it was. But anyway, they referred to Stephen Dean and how, with Artemis, what a wonderful thing he's done by looking at starting that project small and looking at expanding it later on. We're experts at that. We started that back in 2010 when we did La Reina. We started La Reina at 10,000 tons a day of ore to pad, and built it up to 50 odd thousand tons a day of ore to pad. We did the same at Shell Window. We started Shell Window small, and Shell Window grew over time. So we're experts at starting projects small. And when we looked at this project, when we acquired it back in 2018, and it had, this 80,000 tonne a day, $400 million capex, which today would be probably close to $800 million, et cetera, et cetera, et cetera. We just said, whoa, we're not going to do that. Let's start small. And so what we've been able to do, and when we did our marketing to all these investors that took up our financing, we spoke about the starter project, but we also spoke about the expansion project. And even though we haven't done a study in the expansion project, we can clearly see from internal work that we've done that this project can grow from 20,000 tonnes a day to 80,000 tonnes a day is probably the likely optimal throughput, and be and increase production, gold production, from 100,000 ounces per annum to about 300,000 ounces per annum. When we get to 300,000 ounces per annum from one mine, we become a world-class project. I'm not going to say tier one because I don't believe in all that bullshit, but a world-class project that somebody else is going to want. And this is what I say to people is that, I'm not going to be, and Rio2 is not going to be a company that's going to say, well, we're not going to be the next mid-tier gold producer in Latin America, and we're going to do this, and we're going to do that. Just like, Aris, and just like G Mining, and just like every other, Latin American company. No, I think, we're going to execute and deliver. We're going to build this project, 20,000 tonnes a day. I think we're going to expand it, and we're going to be responsible for the expansion. But I think once we get to that point, somebody else is going to want it. But then we're going to be a $1.52 billion company, and we'll be glad to hand the keys over, which is a 7 to 10 bagger from where we are today. So still, we're 200 million US company today with an MPV on our starter project at today's gold price of about $800 million. So the penny still hasn't dropped, but once again, we've been down this road before with our previous company, Rio Alto. Nobody believed us at the beginning. We executed and delivered, and the rest is history. We sold the company for $1.2 billion in 2015. So we know how to execute and deliver. We also know how to exit. And somebody's going to want this project. If you look at the gold mining industry in Chile, 4 companies, Rio2, Kinross, Goldfields, and Pan American Silver. Chile last year produced 1 million ounces of gold from byproduct credits of copper mining from all gold production in the country. 1 million ounces, that's 30 tons of gold. We're going to be part of that. But also the other thing we're going to be part of, and because I don't think Kinross is long-term Chile. I don't think, Goldfields, they've just built a new mine there, so they'll be there for a while probably. And, Salares Norte should be a pretty interesting mine once they bed things down. Pan American, I'm not sure because they're all over the place. So whether they stay in Chile is another thing. So I think there's a consolidation opportunity for Rio2 to consolidate projects and become something that somebody else will walk into and go, well, great, we've got an entree and a big base in Chile. So that's what I see ourselves growing into. So it's going to be an interesting 3 to 5 years, as I say to people.
For sure. And we'll come to some of the blue sky in a second, but I want to kind of stick with the kind of state of the nation, the mindset of the financiers, because it kind of gives us some clues as to how they're viewing the market. There's not, as you just said, there's not a lot of options on the table in terms of advanced development, pre-production stories out there. Certainly not good ones. So this kind of sticking with this kind of the stage development, the financiers, did they almost want to see that as the kind of cornerstone for the capex, the cornerstone for the business plan? Because it makes it quicker, it's cheaper, less risky, less moving parts, and generally sort of deliver that kind of revenue into a market which has been pretty tough the past few years to kind of reduce the dilution component. Are they thinking like retail is what I'm trying to get at? How bruised are they?
Oh, look, I think yeah, it's a fragile business. I mean, they're all bruised, apart from the last couple of years where things have started to pick up, particularly on the producer side. You know, and a lot of funds disappeared. So, you know, we got some people into the book that I hadn't, you know, that were in Rio Alto 15 years ago and still around. So, quite interesting to do business with them again. And you know, but yeah, no, everybody's been beat up, and unless you're invested in the producers that are, you know, printing money at the moment, there's not much else. And as you say, you know, the developer landscape. I mean, the tag developer, you can remove that from probably 70% of the companies that are saying they're gold developers, because they're probably not going to develop in this cycle, at least, for various reasons. So it's an interesting space. It's not an easy space. What helped us was we've done this before. So backing the management team was you know, something they found easy to do, and you know, they knew who we were. You know, we're not novices at this, and that helped a lot.
It's kind of interesting to me when seeing the different types of development stories. As you say, that tag is debatable sometimes, but with the kind of rising gold price environment, you know, it covers up. I always use this phrase: it covers up a multitude of sins, because the, you know, margins help sometimes. I was talking to someone last week, and, you know, at $2,200 gold, they weren't making money. Would you believe? At today's prices, they kind of look really clever. So, you know, these things kind of sort themselves out. Money sorts out a bunch of things. What they can't sort out is technical failures. We've seen a bunch of those over the last 12, 18 months. We've seen, you know, tailings dam failures. We've seen heap leach, you know, failures. With your expertise and so forth, that was, you're saying that's kind of giving the kind of financiers comfort that the simplicity of this, the team that you have who've done it before, makes them not as concerned as perhaps they may have been with other development stories coming in looking for money.
Yeah, and also we're not spending hundreds of millions of dollars, right? I mean, our build is going to be sub 150, and so I can't guarantee that everything's going to go swimmingly, but the sort of downside in our case is going to be less than the downside in some of these bigger projects. And you know, Artemis, I'm not being negative, but Artemis had a blowout of 7% on capex, which was $50 million. I mean, that's $50 million is a lot of money to somebody like us, right? Maybe not to Artemis, who I think a $3 billion company today. But you know, at the end of the day, you know, I think on the junior end of the scale, they're treading warily, and they're looking for projects and opportunities that mitigate any major disasters and any big losses of investments that they could step into.
Okay, and again with the financiers, there's a lot of them who've taken a little nibble here. Okay, they've had a little tickle on what the potential could be, but no one's kind of, you know, gone all in, shall we say? The upside, the kind of development upside, the next phase. What were the conversations from them saying, look, just get stage one done, get it built, get into production, show us that works before you even consider the kind of larger opportunity? Or they're saying, look, we kind of trust you, but for now, let's just stick to our knitting?
No, I mean, I don't think anybody specifically said anything like that to us. I mean, we were quite clear about what our strategy is, which is the bootstrapping of the project, 20,000 tons a day, getting it into production, mitigating the lack of water that we currently face, which is really the key to the expansion. And you know, we've got a plan to do that, to get a water solution in place, and then to move on to the expansion. Now, you know, we're saying that this expansion, because we don't know exactly, because we haven't done all the work, but is going to happen somewhere between 3 and 5 years from now. So we need to prepare for that. We think we've got some options that we'll outline in a study about the expansion, and we'll go from there.
Okay, so is that more not necessarily access? It's about the water logistics and costs. Is that the concern?
Yeah, I mean, look, it's going to be desal water. I can tell you that.
Yeah.
But where is it going to come from? Who's it going to come from? And are we going to do it ourselves, or are we going to team up with somebody, right? Because, as you know, we've got neighbours. We've got Kinross with La Coipa and Lobo Marte, and we've also got Codelco with a big lithium project on the Salado Maricunga, which is to the east of our project. So they're all going to need water, right? And for their projects and their builds. So do we team up with those guys? And we've already started talking to those various groups. But what is the water solution going to be? Who's going to provide us with the desal water? Because I don't think we're going to build a desal plant. Somebody else is going to do that. And there's excess capacity of existing desal plants in Copiapó, so we could tap into one of those. But who's going to fund the pipeline, et cetera, between whatever the plant is and project? That's really the key. And how long is that going to take? And the environmental aspect of approving that is another thing that we have to deal with.
Right. And again, sticking with the financiers, because like I said, trying to learn, how I should think as an investor always. The single asset exposure, obviously they piled in, but not I say no one in a huge way. Is that still a thing these days, along with single jurisdictional risk?
No, but we also say that we want to be part of consolidation and we want to be part of M&A. I mean, we do want to do that. And, we've been quite active in that space over the last 6 years, I can tell you that. We've looked at lots of things. A lot of people haven't taken us seriously during that time because we've had all sorts of issues, as you know. I think now that we've overcome those issues, we're fully funded. We've got a stack of money that is over and above what we actually need for our one asset. We become a little bit more attractive to people to sit down and talk about, putting together other assets or opportunities. So, but it's not something that the investors stipulated, no, or indicated they were worried about the fact that we were only one asset company. They knew that. I mean, that's something they were willing to accept.
Okay, and so the other part of the expansion potential is obviously this M&A, as you refer to. Based on what you say, well, I'm slightly confused actually. You feel that in country there's some real opportunity, so that's not going to get rid of the kind of jurisdictional.
I think there's in-country opportunities. I think there's opportunities that suit our management team,
right?
And I don't know where it's going to take us. We've looked at lots of things in North America, South America, mainly North America, South America. We're America's company at the moment, so. Where could it take us? I don't know. But I think what I'd like to see is our management team use their capabilities and skill base to advance projects that are likely in our neighbourhood.
Right. Okay. I guess that makes sense. And I mean, you've also said that perhaps some of these developer tags aren't valid elsewhere. There is a distinct lack of advanced projects, certainly with the profile that perhaps your team's more used to dealing with. So, what's your read on the market more broadly in terms of new ounces into the market? We've seen a lot of JVs, a lot of mergers of equals, where it's the same ounces but just under one roof now, versus new ounces coming into the market. Are new gold ounces going to come pouring in?
Well, they're going to be found first. I mean, there's not a lot of new discoveries. And we've got Snowline in Yukon, but they've got other challenges, obviously. Who else can I think of? I mean, there's a few discoveries in Brazil. Lavras, I think, one of them. And, there's discoveries that have happened in Guyana. Yeah, there's nothing significant from that perspective. I think it's, what we see is opportunities. Well, we think there are opportunities where we can apply our development skills to an asset, right? An asset that could be spinning its wheels. The other thing is our ability to permit projects. I mean, we've had lots of good success at permitting projects in Peru and Chile, right? Two different places, two different types of regimes from a regulation perspective, but dealing with government in Peru, dealing with permitting in Peru, dealing with government in Chile, dealing with permitting in Chile. Could we apply that in another Latin American country? I think so. And could we unstick a few wheels that are spinning? Potentially, yes. Remembering this project was discovered back in 2010. Fenix Gold was discovered in 2010, spun its wheels until 2018, until we came along. And if we didn't come along, it'd still be there, right? I'm telling you, it'll still be sitting there. But where we see the opportunity, right? So that's something that we're good at doing.
Okay. And question I meant to ask you earlier with when you're talking about the simplicity of the heap leach operation, right? No, actually, two things I forgot to ask you. Tailings. Do we have tailings?
So no, we don't have tailings because we're a heap leach project. So that's a big tick because tailings are problematic. They're not and they're costly. So that's something.
So okay, just dig it, put it on the heap leach.
Beautiful thing.
Simple process.
It's a beautiful thing. Okay. When it happens, and we get all you people out there to have a look at it, you're going to go, "Oh, that's pretty simple," and you're going to say, "Yeah, and go and talk to Zijin so you can go visit their La Reina mine site and see. I mean, I've got photos of how we started La Reina, or a rinky-dink little pad. I mean, it was surreal when we saw it. Well, for me, it was surreal seeing it go from a concept to a real mine and then become a 220,000 ounce per annum gold producer. I mean, it was sort of mind-blowing, but that's what we're dealing with here. And I think, because of the disappointments that have happened in this sector, there are some people that don't believe that you're going to be successful, that there's going to be some cataclysmic bumps that you're going to run into, that are going to tear strips of skin off you. We don't think so. We don't believe so. And so we just got to do it, execute and deliver. That's what we've got to do.
Okay. And the second bit of that was the ASIC. I'm going to focus on the ASIC. Like, there's so many things that affect your margin at the end of the day, but a lot of people hone in straight on the ASIC because they subtract that from the price of gold and think, right, that's it. That's how much you're making. I know there's lots of more moving parts, but let's go for it. It obviously seems quite competitive in today's environment. What is it, around sort of 1250 sort of level?
1250 is our current estimate.
Right. Okay. How do you affect that in terms of, I don't know, the run of mine and recoveries and payables and all of those things? I mean, how do you affect that number positively?
Well, it's all going to come down to how this project leaches and what the eventual recoveries end up being, and we think 1250. I mean, the big contributor to 1250 is trucking the water to the project, and fuel costs obviously need to be taken into consideration. Fuel costs and labour is what's involved in getting that water to the site. So one good thing is fuel costs have not changed since in any big way since we did our feasibility study. So we're still feeling comfortable about that. Labour costs have gone up a little bit, a few percentage points, but nothing major. The other thing that's working in our favour is when we did the feasibility study, I think the peso to dollar was about 800 to 1, and currently it's 900 to 1. So that's in our favour at the moment. So there's various things, but 1250 ASIC from a feasibility study is a guess, right? I mean, you've got to be honest with everybody. It's a guess, and we'll see what it ends up being once we get a few months of production under our belt.
Right. But in terms technically, you would look to sort of eke out better recoveries once you sort of understand that.
It's going to come down to controlling fragmentation so that we've got a nice size of material that's going on the pad, and just the way that we irrigate that with cyanide, and the gold attaches itself to the cyanide and comes out, and I mean I call it, I say to people, it's a bit of witchcraft, because at the end of the day, it's a bit of hocus pocus. There you go, there it is, and boom, and out comes a doré bar of gold. So there's a few things that we can try and obviously control during that process, but yeah, let's see how it does leach. Is it 75? Could it be 77? Could it be closer to 80? I don't know. We don't know. Could it be less? I mean, La Reina did 85% run of mine, and that blew us away because we didn't see that. Let me tell you, we didn't even do a study. I mean, IM Gold Cambriol did a study on La Reina. We just decided to go and build it, and we haven't talked much about Wheaton as well. I mean, Wheaton are in this, partnering with us on this project, so they obviously understand what we're trying to do, and they obviously understand what we did in the past. But we did and the reason we've done a gold prepay with Wheaton was because we were the leaders in gold prepayments back in 2010 when we did Red Kite. We did a total of $50 million of a gold prepay back in 2010. It was the first time ever done in the industry. And here we are back in 2024, and we're doing another one with Wheaton Precious Metals, who initially wanted to give us an additional stream. And we said, no, you already got a stream. Why don't we do a prepay? And they went, well, maybe we could do a prepay. And so we've done the first prepay with that Wheaton Precious Metals have ever done with a client is us, which is kind of neat. For 95,000 ounces of gold over 7 years is the recipe, and we've got the opportunity of paying it back quicker, which we hope to do because of where we are with metal prices and gold production, and so yeah, it's a sweet deal. But they obviously are looking forward to teaming up with us, not only for this project but also for where we go with the expansion project, because I'm sure they're going to be there with additional finance if we need.
Okay, I mean, well, and to that point, what are the triggers that you need to see to move from that kind of stage 120,000 up to 80,000 ton per day?
Well, we got to do. Hey, just two critical items. We've got to do an EIA on the expansion, which is not going to be difficult because most of the infrastructure is within the existing footprint, right? Secondly, we've got to do a study that outlines what the project's actually going to look like and what the capex is going to be to build that project. We've got to find a water solution that we feel is the most optimal solution for ourselves, and not only for ourselves, but potentially for our neighbours and what their future plans are. So, there's a few components there. But I would say that during next year, during the construction phase of the project, we'll be able to put those numbers on the table.
Right. In terms of market positioning, you reference, well, here are the 2-3 companies that you kind of compare yourself to, and yeah.
I hate comparisons.
It helps people understand what you're like.
I mean, the problem with comparisons is it's not apples with apples, right? It's usually apples and oranges and mandarins and peaches and plums. So, at the end of the day, we're in the true developer space, and we're financed, and but there's not many people building anything at the moment. I mean, who's building stuff at the moment? There's a lot of people that want to be. I mean, G Mining have executed. They're in production in Brazil. Who else? Artemis near production in BC. Much bigger companies than us. I mean, in the billions of market valuation. Here we are. We're a $200 million company. So it's very, very difficult for me to say who our comparatives are in this space. But there's not many.
No, no, but to kind of get up to their sorts of valuations or start moving towards those sorts of valuations, we're going to need to see execution and possibly even production, therefore revenue for the market to allow you to play catch up, right?
Yeah, and we've suffered because we were held up, with our EIA, by the government, etc. I mean, we had a lot of poo stick to us, over the last 2 or 3 years. So sort of brushing that off and, waiting for people to recognize exactly who we are and what we're doing in comparison to what these other guys are doing. And, once again, when we show a 300,000 ounce per annum gold production story in the making, I think, a lot of eyes are going to sort of pop open in our direction in respect to what.
One last sort of kind of market-based question, which is around price sensitivity. We've talked about ASICs and so forth, and and your thoughts around that. It's been an extraordinary reaction in the market, gold price from the beginning of the year to now. Extraordinary. Haven't seen a move like that. Well, I'm not sure we've ever seen a move like that. Will there be a corresponding negative reaction? And if so, what could drive that? And then what does that do for you?
Well, first thing people should know is we don't have a marginal project. So at $1,250, even if it's $1,450, I mean, is gold going to go back down to $1,500? I don't think so. I'm not going to be able to tell you what I think the gold price is going to be because I got no clue. But I think we're not marginal. That's really the key to everything, is not bringing a marginal project into production. And as you were saying earlier on about developers, there are developers that are selling their story on the optionality in gold. I would hate to do that, right? And we've never done that. I mean, even from 2018, we always knew that this was never going to be a marginal project. We knew there was going to be a few $100s of margin that we could rely on, between the cost of production to whatever the gold price was at the time. Now we're enjoying, a significant margin. And now it's a race to get to production to enjoy this because, nothing better to be a producer in this environment. So that's really our objective. This is not a marginal project.
Okay, let's kind of finish up. Just remind people, what's coming up next and reasons to believe why this thing goes all the way.
Well, what's coming up next is the execution and delivery of the construction of the project. So that's basically started. I mean, we are mobilizing our contractors, our process engineer, and our civil contractor. So that's all happening. We've been staffing up with people in Chile. That's still continuing. Remembering there's going to be projected about 1,200 people working on this construction project amongst our contractors and amongst ourselves. So it's a significant contributor to our employment in the Atacama region. Over the next 12 months, we'll be doing the expansion study. We'll be starting the EIA of the expansion study at some point. The EIA is going to take us, let's say, 2 to 3 years to complete. That's the prescribed time frame in Chile to do that. We'll be working on water options and firming those up for the expansion. And as I said to you before, I think we're going to be a consolidator and a part of the M&A space in the junior sector. And I think we'll do some things that maybe surprise some people. Hopefully not shock people, but surprise them, because I think we've got a great team that can deal with all sorts of hurdles from a government and permitting perspective, given what we've done in Peru in the past and are currently doing in Chile. So I think people need to understand and not underestimate our ability to execute these types of projects in Latin America.
Right. So you're going to be the guys who finally prove that grade isn't necessarily always king.
Grade is not necessarily king for sure. When you have a 0.5 gram bulk tonnage ore body outcropping its surface that hangs together nicely, that has open potential from an exploration perspective, and currently contains 5 million ounces of gold, you can make a lot of money. And the whole thing is, like I say, in the next 3 to 5 years, somebody else is going to want what we have. But it ain't going to be for $200 million. I can tell you that.
Alex, good to speak to you, sir. Stay in touch. We'll see you soon.
Okay, thanks.